Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Dennis Dick with you this morning. Joel out on a road trip to Virginia, but the show must go on. We were talking about earnings from HIBB Sports, Foot Locker, ROST Stores, SPLK, Autodesk. We'll talk about the stocks that held up surprisingly well during yesterday's session. We'll talk about stocks that Dennis was buying on the dip yesterday, maybe nibbling a little bit in his long-term portfolio. We'll talk about the benefits of discretionary orders and how they can help your trading and more. Our guest today, Kenny Glick, hitthebid.com. He will join us at 8:35. Dennis, how was your night?
It was actually pretty busy. We chopped around a lot. It was one of those choppy nights. Sometimes those can be good. Sometimes it can be bad. It was pretty good last night. I mean, I'm going to find out more this morning because obviously I have a lot of overnight positions and we'll see how those work out. But it was pretty good. How was your night?
Fine. Typical night. Typical night for me.
What's a Spencer Israel typical night? Tell us about your typical night.
No, why do you say uh-oh?
He's thinking, what should I tell?
I go home. Basically, I watch some form. I'm very committed. I'm very organized in terms of how I watch my shows. I keep track of everything, and so I just every day I make a little bit more progress on another show. But I basically am, just watching a show.
What show are you watching right now?
So I'm actually watching several, but at the moment I am watching American Crime Story season 2.
That's on Netflix?
It is on Netflix, yes. So,
have you cut the cord? Is that all you have left now is Netflix?
Actually, speaking, you know what I did last night for the first time in how long? I watched Jeopardy. And
is he back?
Because he's back, and I only have like 5 channels. And I grew up watching Jeopardy, Wheel of Fortune, and I haven't watched him in a while. So I thought, tonight's night, I'm going to watch James Holzhauer. He almost lost last night.
He almost lost. How did he almost lose? What did he do?
He was losing going into Double Jeopardy.
Oh, really? So he found somebody good, competitive.
Yes, and he only got his strategy is to go for the higher price clues and then get the daily doubles and bet all of it. And he only got 1 daily double the whole game. The other 2 went to the other guy. So the guy was doing the same strategy to him, and he was losing until about 3/4 of the way through the game, and then he came back and he won. So it was.
So he did end up winning.
Yeah, he won. He's $9,000. I think $9,000 shy of $2 million.
Wow.
So
what's Jennings' record for the money?
It's like 2.7 or something.
So he's not that far off, and like 1/3 the time.
Yeah, exactly. He'll be there like tomorrow probably.
That's crazy that he almost lost. I keep wanting to flip it on. I've never watched it yet. Like I don't watch Jeopardy, and I keep wanting to remember to put it on. What time is it? 7:00?
Or 7:30, depends on your market.
7:30. And I don't even know what state. What is on? NBC?
So for us, it's on NBC.
Yeah. Okay.
Yeah.
All right. So I want to watch Jeopardy guy.
Yeah. Seriously, watch it. It was great. And Amner's boy saying he's beginning to hate the guy. Can't hate the guy. The guy just plays the game so well. So anyway, that's what I did last night.
Crazy story for that guy, anyways. So
professional sports gambler.
Well, and we're somewhat professional gamblers here too, but we do educated gambling here with the stock market.
Sure.
So anyways, and we're trying to do it here this morning. We're trying to do some trades. So guys, what's up? What stocks do you want to talk? Because we got quite a few earnings stocks that reported last night. We've got a lot of stocks bouncing around. I did some nibbling in the long-term portfolio too.
What'd you buy?
I said I was gonna. Okay, a couple ETFs. So IWM equivalent. So just nibbling into some small caps. Also EEM equivalent. So nibbling into some more emerging markets. Basically getting back some of the stocks that I sold back in December and never rebought them. So I'm getting the chance to get back in. So I'm getting a little bit. I was in too much cash, and I was actually being punished for that probably in April because my portfolio is still doing well, but I was in a little bit too much cash. I'm trying to put a little bit of that to work. Not going all in here at all, but just putting a little bit more to work. So bought some IWM, some EEM equivalent in Canada, and nibbled into a couple other ones, a little more speculative. I bought some of that BOT Zebra. I couldn't resist. I was like, looked at their holdings, and it's the artificial intelligence thing. I've always looked at it, never owned it. I know the P is probably wild on it, but it's not a classic. It's not a classic triple D long-term value play here. But I'm going to stick it in there for a little bit of growth. So bought some of the BOT Zebra and also nibbled, and I mean nibbled into a little bit of Square. I've talked about it for a while. I just bought a little bit there. I think I paid right around 64. So it's right around even to where I paid, because it always went down a little bit further yesterday and then bounced back. So I nibbled, and I mean a nibble. It's like a third of a normal size position. So doing a lot of nibbling right now.
Let's talk about the bots first, and then I want to ask you about Square. So it's not the most liquid of ETFs, but
It's pretty liquid. It actually is. It's pretty.
Okay.
It's usually got a 1 or 2 cent spread. It's pretty
All right.
liquid.
Okay, fine, if you say so.
Yeah.
Top holdings, Intuitive Surgical, Mitsubishi. I didn't really Nvidia.
I don't know about that one, but Intuitive we obviously talk about a lot.
So why? But why this one? There are a lot of ETFs that get.
It's fairly liquid. I love the AI plays. There's a few of them in here. I mean, that's what they're going to be trying to do. You're obviously going to have to pay up for that. We know the multiples are going to be higher if you're just jumping into anything with AI. But then, look at the technicals here too on it. So, and this is long term. This isn't short term. So you've come, and let's just talk about, since the thing come out. Obviously, back in October of 2016, it came out around $15. Had the huge run up to 27. Pulled back and really got down near 16, ran up to 22. So you're kind of getting a little 50% retracement of the recent move. So that's what I kind of like about it. 16 to 22, take $6, knock 3 off, you get to 19. That's why. And I like that low there on March 2. So at 1872. And I want to nibble into some stuff. I like AI. I don't have much AI exposure. So hopefully these people are going to do it right, these managers, because this is what the fund is supposed to be buying.
All right, Square. This one
talked about it forever, wanted to own it forever, and I'd love it to get to 50. That's really where I really want to buy it, but I was like, if I miss it, I want to have a piece. So again, just looking, I like the story. The story here, I believe, is still intact. I know it hasn't done well lately, but I always, in my long-term portfolio, typically buy stocks when they're not doing that great. When something is, usually it's a macro. Usually I like to buy companies that are pulling back because of macro effects. I mean, Square quarter wasn't great. It wasn't bad either, though. It was just, the market's been in the gutter for the last month, and this is a victim of that. I think the story is still intact. I still think eventually this is going to be a $100 stock. And valuation perspective isn't crazy. I mean, if they can make $1.20 to $1.30, which some analysts are saying they can make in 2020, the thing is trading, it's still high. I mean, say, okay, there was some analysts even up to $1.50. So if you get up to there, it's probably be, 25-ish would be. Well, that's where MasterCard and Visa is. So I think it could grow into that multiple and actually be reasonable at this price if it can make that kind of money that the analysts are projecting it to do. So I think within a couple of years, it could have a more equivalent multiple with MasterCard and Visa and more growth opportunities. So I like Square long term.
What the hell?
I'm here because the stock is in the gutter, and I don't know. I'd love it back at 50, like I said. That's where we got to back in December. Wish I would have pulled the trigger. I did not. It went up over 80. Now it's pulled back almost 2/3 of that when you get down to the 63 handle. So nibbling.
This looks like an inverted cup and handle. This chart.
Uh-oh. Is that a good thing or a bad thing?
I don't know if that's a good thing. I don't know. I'm not an expert on the charts, but
I can see the cup and handle failure. It looked like a cup, and then the handle was there at 70. Now it's failing. So I'm not big on patterns at all.
Yeah.
A lot of people look at these head and shoulders, and you can read books on patterns. I don't use them at all. I don't. Okay, there's a head and shoulder. We talk about them every once in a while at the show. They're fun to talk about, but for my trading, individual trading, I don't use patterns. Not at all. My technicals are basically support. I always say when I do my lectures with Bright Trading and stuff, I always say I can teach technical analysis in less than 5 minutes to everyone. My technical analysis is support, resistance, trends, and I like 50% retracements. That's pretty much the bulk. I don't even use moving averages. People will say you're nuts for not using moving average. Well, I've traded 20 years. I've been profitable every one of those 20 years. It's worked. I haven't been using moving averages, so that's worked for me. I mean, if you use moving averages and you're profitable using moving averages, by all means, continue to do it. I don't use them. More lines in the chart just confuses me. Maybe I need simple. But anyways, and when they crosses, these death crosses and golden crosses, I don't believe in any of that. So I think it's a lagging indicator. I think there's better indicators. I look at support, resistance, and trends. When I bring up a chart, I want to know, is the stock strong? Has it been strong? If I'm trading it, I want to trade strong stocks. From an investing standpoint, I use the technicals to a certain extent, but again, I don't mind buying a weaker stock if I'm holding it for 20 years. I think the Square story is intact. I think I'm going to be happy that I stuck a little bit of this in my portfolio, and hopefully it comes lower and I can buy some more.
When are you going to coin your own technical pattern?
The DDD technical? Well, how would you do that?
I don't know. Just brand your own, just the pattern and brand it as the
I'm actually not, and when we say this, I'm not, like, I talk technicals all the time, and I think for swing trading, technicals work very well. But remember, I'm mainly a headline trader, right. And when I'm trading headlines, I don't even look at a chart. I would say 90% of the trades that I make on a daily basis, I don't even look at a chart for it when I strike. I mean, there's a headline. You can't have time to look at a chart and analyze it. There's a headline breaking. You got to just go in. And most of the time, I trade the same stocks. So, and sometimes I pick on some smaller ones too if there's a headline. But, I'm picking on the same 300-400 stocks. I kind of know what the charts look like. I'm looking at these charts all the time. So I know if the stock's strong. I know if the stock's weak. And I go with that. So anyways, I respect the technicals. I think they have value. I think when I'm doing my long-term stuff, it's more of a timing mechanism there. But I'm not afraid to buy an ugly chart in my long-term investment portfolio. It never happened.
Well, let's talk about stocks that were bought yesterday. Stocks like Home Depot and Intel. Sort of surprising to see them get bought the way they did, and especially the fact that it was such a big down day for pretty much everybody else. Were you in there?
I wasn't in these stocks, but I was obviously trading, and obviously I did a little bit in the long-term portfolio there. But I mean, a little bit of this is just buying the dip. They came in and they hit them all morning, and then they decided if we just look at the overall indices first, and then we can start looking under the hood at some of the stocks that you just talked about. But we were selling off basically until 2:00. 2:00 comes out, and we rallied pretty hard thereafter. It was actually after 2. It was almost 3:00. When we really started to rip. So we had that end of day rally. Maybe it's, people don't want to be short overnight. I don't know what it is, because you never know what kind of tweet's going to come from Trump here overnight or what he's going to say. And he was speaking yesterday, and he did say some comments, that he thinks they can get a deal. So, I mean, that might have been a little bit of a catalyst too. Maybe that's a catalyst overnight as well. But I think you just have, this market's really headline driven right now, and it's nervous. And sometimes, the shorts can be nervous too. So we always talk about the nervous market driving prices down. Well, maybe some people were pressing shorts, and maybe they got nervous pressing those shorts, and that's why they start to buy and come in and obviously buy with an hour to go in yesterday's session. And now we're seeing up another 11 points here this morning. So you're seeing a little bit more follow through here. Again, I'm going to say it. I don't think this is the December market. I don't think we're going to be going down and getting down to S&P 2300 here. I think this is a pullback. I think if it gets really difficult, I've said this every day on the show, and the market really starts to pull back, I think you're going to see Trump come out and defend this market and be very keen on getting a deal done. So I think Trump defends the market, and we know the Fed defends the market. We saw that back in December. But I don't want to fight the Trump, and I don't want to fight the Fed.
But how many times can that work, though? Like for Trump, like he came out, he defended it a few weeks ago.
If he does a deal, I mean, let's just say hypothetically we fall another 100 points from here, 100 S&P.
Right. If he actually
he's going to be going and trying to do a deal, like quickly, because he does not want, you're coming in. So what are we? We're a year and a half away from the next election, but you really, it gets started a year before. So he doesn't want to be starting, his campaign in a market that's in the gutter. So I don't think there's no way. He played hardball with China because the markets were at all-time highs, and he had bullets in the chamber because the market's at all-time highs. Now that it's pulled back, he's being a little bit more, cautious with his statements. And I think if it pulls back significantly, I think he gets a deal done. So it's something, and I think it's going to be, he's good. He's working in the deal as best he can. I mean, it's all tactics. It's negotiation tactics. He's an excellent, just think about his business. He's a pretty good negotiator. So he'll use whatever he can. And when the market's at highs, he can use that and know that, okay, well, the markets aren't beat up here right now. So I'm sitting pretty. I can be a little bit tougher. So all I'm saying is if Trump pulls, if the market pulls back significantly, I think Trump defends it. So I think the market then comes back. So that's why, I'm nibbling here right now. If we pull back more, I'll probably buy more. I don't think we're going to December where we're in the gutter. Some people are thinking this is the beginning of a bear market. I don't think it is. I mean, nobody has a crystal ball. And anybody who says, and I've been around on sentence here for about 10 minutes, but anybody who says that they can predict the market more than 6 months or 12 months out, it's just a coin flip. I have trouble predicting the market 2 days out. 2 minutes out, I'm pretty good at it. That's why I'm a pretty good trader. 2 days is tough. 2 months or 2 years, good luck with these analyst projections of where it's anything can happen. You don't know what's going to happen between now and then. So, it's very difficult to predict the market anything more than a couple days out.
We'll see. Let's move on to some earnings here. Foot Locker reporting this morning. So we'll start there because it is the biggest loser on my scanner here. The Q1 EPS for Foot Locker, $1.53 versus $1.61 estimate. Sales of $2.07 versus $2.11 billion. So they missed on both the Q1 numbers.
That's not good.
Comps up 4.5% in last quarter. They also reaffirmed their fiscal year guidance.
Oh, man. Okay, so miss and stocks down significantly here in the pre-market. So let's just do quick analysis here of the fall. You're down 8%. You got 2 lows. If Joel Elconin was here, he'd be saying that 47.07 low back on December the 21st. I'm going to say there's lots of lows in the 45 to 46 area. So about 2 points down from here, you come into pretty major support. We just dropped 5. Can we drop another 2? Maybe. So I think I'm just sitting here and looking at it from this perspective and saying, I don't know. I think if you buy it at 48, you're probably early. Stocks in the gutter. I've seen multiple stocks, go report disappointing earnings and then continue to go lower. So I'm not going to be a hero here. I think if I was taking a shot, I'd wait for 45 or 46. I think if you buy at 48, I think you're early. Yeah, but these things are funny. They can come back too. I mean, it's traded 729,000 shares, so it's starting to do some volume now too. I mean, when stocks, fall and then they fall on 10,000 shares or 30,000 or 50,000 shares, and they quickly rebound, it's because that price doesn't have much memory. As it trades more and more here, the memory is increasing because there's more people who are in from these prices, which then become overhead supply. And now you have everybody who's taken along in the port report looking to get out too. That's why this doesn't just snap back. So I think, if anything, eventually we drift back down to the 45.
And you talk about keeping technical analysis simple. You can just see at the chart, pretty much all of last year, 46, 47. Yeah. Those were the lows, more or less. So
I mean, that's how I do it. What Harlan Pine style. Remember, we always had Harlan.
Yeah.
He'd come in, he'd say, when you bring up the chart in the first second, what level jumps out at you? I bring up this weekly or monthly, and I see 45 to 46, all those lows in the summer of 2018 and fall of 2018. That's what jumps out at me. We're $3 away from there. I feel like that becomes a magnet.
All right, the biggest retail gainer this morning, actually biggest gainer on my list, is HIBB Sports, HIBB. They also had earnings this morning as I pull the chart up here. Q1 EPS, $1.61 versus $1.32 estimate. Sales of $343 versus $326 million. So they beat on both the Q1 numbers. Comp sales up 5% on a year-over-year basis. They also raised their fiscal year 20 EPS guidance by 20 cents from $1.80 to $2. And all in all, great report.
I mean, the stock's popping big time here on this report. It's really good. I saw those numbers break at 645. I actually had a small short position just from last night. It was trading up $1 or something. I think I got a very small. I tried to get more, actually. So I'm glad I didn't get any more. And that was in the mid 20s. And I was like, it's giving me a little lead. I'll take a shot. And obviously, maybe the person who's bidding it up knew more than I did. But anyways, regardless of the point is, you come in this thing and you read that and you're short it. You're like, It wasn't a huge position, so I wasn't going to lose, a lot of money regardless, because I just didn't get filled on much size. Thank goodness last night. But I come in here and I was like, okay, so I've been in this boat, lots of times where I'm on the wrong side of a trade, wrong side of an earnings trade. I mean, I'm on the wrong side. I mean, we make 100 trades or 200 trades in a day sometimes.
You're on the wrong side.
All the time.
Yeah,
I'm very good at managing the wrong side of the trade. And I mean, you try to get out as for as little loss as possible. So the thing's trading up in the 23 handle, but it's really wide. So you know what I do, first of all, is I don't want to come and start bending it up and trying to like get out. And not that I had a lot of stock, but any bid makes it look stronger. I don't want to like push the price away from me. So I want to stay out of the market. So I use what's called the discretionary order. And I use this a lot in my own trading simply because I don't want to be inside the market. I don't want to be the guy pushing the price away from me. So if the price comes down to me, I want to be able to automatically buy, and I want to be able to buy quickly. So when you put a discretionary order on an exchange, it automatically lifts if your price can get. So I think on HIBB, I think I threw like a $20 or a $19 buy discretionary order. So my bid is way down at 19, not inside the market at all. So it doesn't look like, I just don't want to impact the price, like my order pushing the price higher. I don't want to do that. So I want to be outside the market. So I put 19 with the discretion, I think of $3 I put on it. So I was saying anything under 22, automatically take it. So this thing was trading up in the 23 handle, and somehow I got filled at 21.40. You can see the print on the tape. So somebody came and offered 21.40 this morning, and my discretionary order was able to fill, and I got covered at 21.40. It's pretty good cover, so that's pretty good risk or managing out of a bad trade there, because this thing's now obviously 23 or 22.70 has been trading the 23 handle all morning. So that's discretionary order. It's a powerful tool. Ask your broker about it. I think Interactive Brokers has them. I'm sure there's some other brokers that have them too, but they work really well because they're quick. I mean, it's going to automatically execute if anybody offers on that exchange, or depending if you're using smart orders or what you're using. But every broker has their own types of discretionary orders. But I mean, they're quick, and the thing is, they're outside the market, so it's not pushing the price away from you. Because I always say, you bid for a couple hundred shares of something that just reported earnings, you're pushing the price higher on yourself. So you don't want to be inside that market and pushing the price higher on yourself. Like, that's why I think people do wrong. They start bidding up and they start scrambling, trying to get it. And all they're doing is, you got high frequency traders that are going to read that this guy wants out, and they're going to try to, push that as high as price. Now on HIBB, it might be a different story, but on anything, you just don't want to scare people. So if you're trying to buy the stock and you're scrambling around, putting bids out there all over the place, you're just pushing the price higher on yourself. I mean, this is all why institutions hide all their intentions now. It's why they've all moved away from the way they used to trade, where, they obviously, use VWAP, they do everything that they can to hide those intentions, because there are fish lurking that will try to figure out what you want to do and then make you pay as much as possible.
How often do you use this discretionary orders in your trading? All the time?
All the time. I'd say probably not half of my orders, but a good chunk of my orders are discretionary orders. I do not want to be in the market. I don't want to, if the market's tight, let's say the spread on this HIBB is 22.70 to 23.20 right now. Use a hypothetical example. Let's say you'd buy 22.80. Why not go bid 22.80? Because that's going to push the price higher, and people are going to go 81, 82. You got algorithmic penny jumpers that might penny jump you. You've got, other algorithms. I just lift the offer thinking you really, want to buy it. This is just a hypothetical example right now. But if I wanted to buy it, I could go like 21 or $22 or $21 with $2 discretion, buy anything under 23. So I use discretionary order all the time. Right now, I probably got like 10 or 20 discretionary orders floating out there right now as we speak, that I would buy this stock if it went down there. I place these outside the market, and if they come and the price comes down, I'm going to buy it because I want to own the stock for whatever reason. So I use discretionary orders all the time. It's a great tool.
Questions from the YouTube chat, and I just want to confirm, you no longer trade options, right?
I do sometimes.
Oh, you do?
Yeah, but I don't trade them like I used to. I used to do some active option trading, not maybe as much as Nick should.
Not anymore. Okay.
I do. I will trade them from time to time, but I'm not that active in options. I'm an equities guy. I mean, I did a lot of options trading back in the early 2000s. I would trade, and obviously I've talked about these different things. I did a lot of, around the pin, a lot of scalping, a lot of different types of strategies on them. I had filters running looking for cheap options, and I'd buy them, with an hour to go on the Friday expiration. I try to buy options for a penny and then try to offer them up and offer the stocks up, and after hours. And if I got lifted, for 20 cents, I turn around and execute the option. That penny just turned into 20 cents. I used to do that stuff all the time. It was a lot of work. The options are a lot of work. It's more work than the equities, I find.
Questions from Jazz? What's the code on Interactive Brokers for a discretionary order?
Oh, wow. I don't use I think Interactive Brokers has them. I do have an IB account, but my main account is obviously Ready, which is Thomson's Reuters. So call IB, go technical support, say, can I get, access to these discretionary orders? They'll probably tell you how to do it. You just add them, and then you can put your price, and you put, how much you want to put on it. They work great. I mean, Brad Katsuyama, who is obviously with IEX, and I know Brad, and I was talking to him out when I was at the SEC. What was I? In 2016. And I remember Brad was talking about discretionary orders and how he used to always use them at RBC. And I was like, Brad, you're right on the money. That's the best thing to use in this market, because you're outside the market. You're not chasing away from you. And if the price comes down to where you want to be, it'll automatically lift it. So I love the discretionary order. Oh, call IB.
All right, let's move on to Autodesk here. The other biggest loser on my scanners here this morning, ADSK. They had earnings yesterday after the bell. As I get that chart up here, 45-cent EPS versus a 47-cent estimate, sales of $735 versus $740 million. So light on both of the Q1 numbers there for Autodesk. Did they give guidance? Let's see. They did. Their Q2 EPS guidance was in line with the estimate. Their Q2 sales guidance in line as well. Fiscal year guidance in line. Fiscal year sales guidance in line. So in line guidance and light on the earnings.
$150. That's the level that jumps out. I just pulled the Harlan Pine. I brought up the chart. What level jumped out at to me? 150. Sounds like a nice whole round number. If you really want to be fussy, you can go to the February lows and say 149.12, and then in March you got down to 149.50. I'm gonna round and just say $150, maybe right below that, 149 to 150. Major support down there. I'm not sure you get down there. This stock has been loved by the market for a long time. It's one of those that are probably going to be prone to buying the dip on. I think it gets near 150. I think buy the dippers are all over it.
All right. What other stocks at earnings? We talked about HIBB. We had Footlock.
Splunkster.
Yes, Splunk, SPLK.
Oh, and you know what? I almost got this short at 135 and on the pop, because I had it in my head. I was like, this thing got destroyed. It popped, and I was looking at the earnings. I'm like, they're pretty good, but they're not that good. And the thing was 134 to 135 or 133. It was like scrambling around. It popped really quickly, and I was like, man, I want to short this. I tried to get out there 135. I think it ticked there. But again, I don't like doing it right off the hop. I don't want to be in that first wave, because what if the wave takes it up to 140? I like to wait for the pause, and then I've got like a level. And if you look at the after hours trading, bring it up on the Splunkster there, you can see what I'm talking about. Like, I think it actually, can you see it?
It did. The high was 135.67.
Yeah, and then it paused, and then it kind of hung out there, like it looked like it was stalling. And that's when I strike, is when I see it stalling out. I had in my head that I wanted to fade the move because it had such a bad day. I was like, there's gonna be lots of willing sellers here, and this quarter wasn't great. So as soon as I saw the numbers, I'm like, I want to fade that. So, but I want to fade the initial move because I don't want to be like a 135 and the thing goes to 140. So I don't want to just be sitting out there trying to call where the top is. Once it stalls, that's where I try to come in and strike. And I tried multiple times to try 130. I could have hit a 133 bid, but I didn't want to hit a 133 bid after I just traded 135. I don't want to give up 2 points edge. So I was like trying, I'm like 134.80, and it's like trade in front. And there's other people doing the same thing. You throw it out there, and then the algo throws it out there. Another person throws it out there, and then you're 134.50. You're trying to bring it down, and trying to get lifted. Couldn't get lifted, and then they start spanking bids. And when 133, 131, 130, I was like, I missed it. So anyways, right idea. Execution, just missed it.
And it was not a great quarter, like you said. They missed. Actually, they beat on the.
It was an okay quarter.
Oh, no, yeah, it was. They beat on the EPS, and they beat on the sales.
It was an okay quarter, but it was a quarter that probably wasn't good enough for what the stock had just done. It needed to really blow it away to go higher, and this wasn't a blowaway quarter, and that's why I was coming in and fading it. As with Intuit, which actually would have been a good fade too. I was looking at 250. I wanted to fade it, but the numbers just were too good. So give us those INTU numbers, because those were good.
Q3 EPS of $5.55 versus a $5.41 estimate. So
the guidance, though.
I'll get there. Sales 3.27 versus 3.23 billion. So they beat on both the Q3 numbers. They raised their fiscal year and Q3 EPS guidance.
Yeah, I looked at all that and I was like, yeah, I kind of, same idea. I wanted to fade it, but it was just too. It was a pretty good report. It was a better report than the Splunkster was. So I saw 250. That's the level that jumps out at me when I bring the chart. I was thinking about it. I just didn't have the guts to do it. It probably would have worked out because the stock came back down, and just it seems like 2 out of 3 stocks that are popping right now on earnings eventually get faded. It's just the way this market is. We just had durable goods come out. If you're wondering why the markets are starting to move, we are starting to leak here a little bit. But anyways, just finishing my thought. I thought 250. I couldn't pull the trigger because the fundies were a little bit too strong for me.
Intuit's main business is TurboTax, right? Oh, you wouldn't know, probably.
I know the website business because I used to use it.
Okay. Well, I think their main business is TurboTax, and
yeah, they got a bunch of businesses.
I can't understand why you'd want to own this stock when you can file for free in the U.S. And I don't know if you saw this investigation from like a month or so ago, but TurboTax was found to have been deliberately hiding the free file page from Google. They were hiding it from Google, so you couldn't find it via Google. But anybody can file for free in the U.S. So why would you pay TurboTax to?
There's a lot of other businesses there too. So and I'm not going to lie to you and say I follow the fundamentals of Intuit to explain all those businesses there. I follow a lot of companies on a small fundamental scale. I got an idea of what they do, but all I know is how they're related. Like I'm a relationship trader, so I know like this is related to this is related to this. I kind of go from there. So when cloud stocks and you're talking Splunk, and you're talking obviously Autodesk. I mean all these things trade, all the techs trade together to a certain extent, but there's like sectors within tech that obviously trade more closely together. So I try to just follow all that. But analyzing the different businesses of Intuit, I know they got the website business, like you said, the TurboTax. They got a little bit of cloud component to them. They got a lot going on.
All right, one more earnings before we'll go grab our guest if we have time. We'll do ROST Stores. They had earnings yesterday after the bell. Q1 EPS of $1.15 versus $1.12 estimate. Sales of 3.8 versus $3.79 billion. So beats on both of the Q1 numbers. Q2 EPS guidance was light, however. Fiscal year EPS guidance also light.
Okay, so this stock, this is like the TJX, the Burlington Coat Factories. These are all, we talk about relationships. These all kind of go together. TJX, BUL, ROST stores. I trade them all together to a certain extent. These have been the best ones, of the retailers. These have held up the most. These are the ones that discount retailers that everybody seems to love. So every time these things pull back, they seem to always be a buying opportunity. If I was looking for a pullback in ROST stores, the level that jumps out to me like a sore thumb is $89. Say 88 to 89. All those lows in March, where we got down to, we actually got down to there in January 2 to 89 a quarter. So you're 92. I think you're a little early. I think maybe you get a shot down there at 89. Maybe the market can pull back enough to give you a shot, but I do believe that there's buyers below. So would I short it here? Probably not, because I think you only got about $3 of upside if you're short. Get down near 89. I mean, it's worked to buy the dip on these things for years. TJX is the same story. It seems like every time that thing gets a significant dip, it's a buying opportunity. So I don't know why I would fight that trend. I mean, if you go on the monthlies and you look, TJX was $19, it's 52. $19 back at the end of 2012. Now it's 52. BURL in 2014 was $20, 155. ROST stores back in 2012 was 20. Now it's 94. I mean, these things are loved by the market. I don't see that changing anytime soon. As much as they hate Macy's and they hate, Nordstrom, they seem to love these discount retailers.
All right, just about 8:34 here. Let's take a quick break and grab today's guest, Kenny Glick from hitthebid.com. We'll be right back in a moment with Mr. Glick. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Dennis Dick, joined now by Kenny Glick, hitthebid.com. Kenny, how's it going this morning?
Great. Thanks a lot for having me on. What's going on, guys?
Not much. Before we get too deep into the weeds here, I want to mention that you, as I understand it, will be at the Benzinga Trading Summit June 20th in New York City. Is this rumor confirmed?
I will confirm it right now, as a matter of fact. Yes, It's going to be a lot of fun. I can't wait to see what happens, and I've already sent in my theme music. So.
Oh, God. All right. Are you going to be walking through your UVXY strategies?
There's really only one strategy there. It always goes down. Okay. No, but I'll talk about really just the opposite of everything Dennis just said. I do not care about what these companies do. I do not care about what their reports were. And, trying to read into fundamentals of whether or not you're going to fade the stock, it's just, you're too deep for me, man. I'm just looking at gap ups to be sold and gap downs to be bought. The last couple
simple.
Particularly yesterday, every trade yesterday was a long for me. Hormel, I'm trading stocks I haven't even traded in like 15, 20 years. I haven't looked at Lowe's in a long time. That Home Depot the other day. Basically, it's the same thing for me all the time.
So you're buying the gap and looking for them to fill the gaps. Like Hormel obviously had a really weak open, and you're looking just for those gaps to fill. Is that the strategy?
Yeah.
Or just flat out buy the dip?
Well, basically, it's always going to be around the VWAP. I'm looking at the 1 minute usually, and something I call the multi-day. So if it's going to go through, I'm looking to buy it when it gets over the 1 minute, and then I have something where it's either an hourly VWAP sometimes, or a day it goes VWAP combined with this morning's data. If you get over those two lines, I think our buy yesterday, I'm just trying to speak from, what I remember. I think around 38.50 we started buying it. And then, we'll start selling it at 39. It's not like we're, getting in at the bottom or, selling at the top. It's just, looking for gap downs to be just bought, assuming that the shorts, if they were short overnight, they've won their bet. So they're going to start covering. And just like the long trade, just like stocks that are gapped up, just looking to fade them because people are, going to take some profits. Obviously I've been trading on Qualcomm on the long side, Hormel, Home Depot, Lowe's, anything that was beaten up. And the odd thing yesterday, the market was getting hammered. So I didn't think these long trades were going to work, but most of them were, again, long. Even I traded the IPO, I think was Rattler. I don't know what that is, but, I like the name, so I was involved.
Well, so Kenny, so you have no problem trading names that you haven't looked at in like a decade? That doesn't bother you at all?
Nope. As long as there's volume and I can build a range and there is a decent, I'm not going to be trading stocks with, 200,000 shares average volume with, a 20 or 30 cent spread. I'll never look at a Chipotle except the day they report earnings. I won't look at stocks, generally like a Hormel. I will never trade probably Home Depot unless it's an earnings report. So if it's earnings, the volume of the day is going to be a lot more. So in those instances, then I'm going to get VWAP that comes into play a little bit more. So that's what I'm looking at. So today, I'll probably be looking at those stocks that you looked at. Autodesk is a stock I despise, never make money on it. But today I'll be looking at it because it's gapped down. Again, just because something's gapped down doesn't mean I'm immediately going to buy it. I like to see it get washed out even more. If something's down 7 or 8%, it usually gets down about 10%, then starts to make its move. So again, I don't trade the open. If something explodes at the open, probably I'm not going to be involved. I wait 15, 20 minutes, give me a range, give me something, around the 1 minute VWAP and my multi-days, and then we'll take it from there.
You're the exact opposite of me, Kenny, because I don't trade the middle of the day. I don't trade that middle stuff. I always trade the open. And why? Because if you get on the right side of that open, it is an art. Because you get on the wrong side, you get murdered. You get on the right side, though, and you make a lot of money. So I trade the open. I've specialized in that for 20 years on trading those opens. And I'll tell you, they're probably very difficult to do. But if you do get on the right side, man, those washouts, like sometimes, I do play for that washout where you get a stock going down. It's like they're going to really wash this. And you actually short that open, which, is sometimes scary. And if you read it wrong, you're going to, lose money in a hurry. But, it's fun.
Oh, yeah. Oh yeah, I remember I used to be salivating at 8:30 in the morning. I couldn't wait for the opening tick because that was the monster candle. But now if you don't consider trading 15 minutes in, still trading the open, it's still kind of trading the open. I just want to see a little bit of that chaos subside. Again,
You don't want the chaos.
I'm old now, so I need to take.
You're not old. How old are you?
Yeah, I'm gonna be 48.
You maybe are getting older.
Yeah. Those opening candles are scary to me now.
He's got his cane getting to his keyboard. All right, Kenny, set us up a trade. You were just talking about Autodesk. Set us up, like, what would you look for here if you were looking to get, so washes out. Let's say we get the washout off the bat. It gets down 10%. Where would you be comfortable? Like, how would set it up, like how you would actually come into this from the long side?
Okay, right now you're trading in the you've seen trading in the pre-market, so it's already had a fail around 158, call it, and you've had to move up to that 161.50 area. So if this thing gets washed down to 153 again, even that 151, I don't know if that's a real tick. I look to see those candles be hit again, because anytime a stock's been somewhere pre-market, often you're going to get a whoosh down to those moves, those levels. So I'm not looking to short it, even if it does break that 155 and rips down to 153, 151. But if it holds the 151, starts to base out between 151 and 153, that's when I'm starting to look for the buy. And I'm going to assume that the 1 minute VWAP is going to be somewhere around 154.50, 155 around that time. So if it finds some love down there at 151, especially on an options expiration, because those 150s are going to come into play. And again, I'm just assuming this thing trades 150s, probably 152.50s. I'm not looking at the options right now. But even if it gets down to that, breaks that 151, that 150 is going to be huge. So if it holds that 150, again, I'm not looking for some hero trade, but if it gets down to those levels, that's when I'll expect it to base out and then, look for a buy down there. But definitely not looking to short it. I'm not a fan of getting involved on the gap direction. I'm just looking for consolidation and then a buy. So again, I've already got levels. So I'm looking for it to maybe break down under that 155, test that 153. If 153 doesn't hold, you're probably going to 151. And then I'm going to be interested in possibly looking for it to bounce around that area.
Let's go look at another gap downer here for you. Foot Locker down 9.33%. So almost down your 10% number there, Kenny. Set us up a trade on Foot Locker.
Same exact thing. You have a pre-market low of 47. So I have to expect it to test that one more time. If it breaks that, then this thing could be tanking even more. So what are we down now? FL, we're looking at 9.5, right? Yeah, so you're probably going to get it down. I wouldn't be surprised, just like you said, that opening candle just, boom, it's at 47, quickly just goes down another $1. Let's see if it holds there. Give me a range. We're already looking at a VWAP. What's good about this, again, this is why I like earnings season. You already have a pretty decent range that's formed. So you got 47 on the low, and you've already started to kind of hang in here at 47.50, and your VWAP's 48.50. So if you're traveling between 47 and 48.50, give me 15, 20 minutes. If you break 48.50, I'm probably going to be a buyer there for a little VWAP pop, because generally nobody wants to stay short once you're over the 1 minute in that first 15-minute session.
Let's take it the other way and go HIBB Sports, HIBB. This stock is ripping here this morning. It's up 15%. It's been trading actively in the 22, even got into the 23 handle for a bit. I noticed a big size seller kicking up there around 23.90. Probably coincides nicely with the last gap up from last, whenever it gapped up there 3 months ago, back in March. I'm looking at 23.88. So thoughts on this one? Could you play this in reverse?
This one, yeah, normally I'd be looking for reverse, but I could see right away, no volume, not interested. Foot Locker, you got 1 million shares traded on it already. That's something interesting to me. HIBB Sports, don't know it actually. I've never seen this stock before in my life.
I gave you a new one.
50,000. I never heard of HIBB Sports. That's
I gave you a new one to trade. There you go. Put it in your list. Okay, so too light a volume, and that makes sense.
That's not a thing in Jersey, Kenny.
HIBB.
No,
HIBB.
Dennis, but
the frog stock, HIBB.
It's a thing else. All right, wait. Looking at the rest of my gainers and losers here this morning, we talked about Foot Locker, Autodesk, HIBB Sports. What else is on your radar here, Kenny? Anything that's on your radar, or not necessarily on our radar?
Yeah, when you guys called this morning, I thought we were going to be talking about fake meat products, because that was.
Let's talk about Beyond Meat. Let's talk about.
Have you tried it? First of all, have you tried?
Really here to talk about fake meat products.
Let's talk about Beyond Meat. Have you had it?
the auto driving make fake meat product blockchain company that I'm investing in.
Okay, I want to hear all about it. Have you had Beyond Meat?
I have not, but a lot of my let's call them wealthy vegan friends are really into this thing. I mean, and they own the stock, and they don't want to hear about dilution or overvaluation. They don't care about anything except that it's awesome, and they want to be investing in this company. It's amazing. They're completely blinded by it. Now, I'm not saying that this thing's going to crash, but the valuation is absurd, and I've never tasted the product. And for me, the name of the company is just hilarious. Beyond Meat, and then what's next coming up? The Impossible Burger.
Well, Dennis, you liked it.
I thought it was okay. My boy wouldn't eat it though. I guess it gave it the 4-year-old test there 5-6 days ago, and we didn't tell him. You know, the 4-year-old likes hamburgers. We didn't tell him that it was a veggie burger, not a meat burger. Just put it on his bun, and put the ketchup, mustard, tomato on it, and everything. So dressed it up nicely for him. He took one bite, and he simply opened up the top of the bun and took the patty off and set the patty to the side, and then proceeded to eat the tomato, lettuce, ketchup, and the bun. So did not like the Beyond Meat burger. So I did not pass the 4-year-old test.
Okay, that's important.
It is.
Right now, if the ladies love it, then it's a good product, which I've learned. The ladies loved Etsy. I didn't know nothing about it, and that stock's done well. Once my wife started getting into Snapchat, suddenly that stock started doing well. So if the ladies like it, I'm involved.
If the 4-year-old would have liked it, it was going over $100. But that day the stock was $92, and I was like, nope. 4-year-old did not like it, and it crashed since then. Or it didn't crash since then, but it went down to 76. So pass the 4-year-old test.
Kenny, have you looked at LK yet? It's Luckin Coffee. It's the IPO.
I'm in it.
You're in it.
I'm in it right now.
You're in it right now.
Yeah, it's one of my only overnights in a long, long time. I caught it at 1450 yesterday. I decided to hang on to a little bit because of the way it ripped into the close. I don't know what that was all about, but beautiful. It held the VWAP all day, so I was kind of forced to hold it. Again, I just revolve my whole life around VWAP nowadays, so it held VWAP most of the afternoon. So I kind of held it, kind of trying to shake you out there at the end, and then had that massive run into the close. So yeah, I still have it right now. Again, what we've learned: Chinese cars stink with NIO. Chinese internet stinks, Baidu. Chinese coffee stinks. This stock is pretty awful. The Chinese Netflix stinks, IQ. The Chinese Robinhood stinks, Tiger. So why would this stock not go to zero also? I think it's in the trade war. I'm not sure.
You're long it right now.
We've won. I'm not a fan of any of this stuff. I just, I'm a symbol and a chart kind of guy. So for me, that stock got washed out yesterday under 14, starts to bounce at 14.5. I get involved in that. That really what it is. And chances of me holding this over the weekend are slim to none.
I'll take the over on the none. You can find Kenny, follow him on Twitter at HitTheBid Radio. What's your site now? Is it still hitthebid.com, or you got a new one?
Yeah.
Okay.
Yeah, hitthebid.com. If you want to come hang out, it's still free for a month. I like to show off how awesome I am for a month, and then if anybody wants to join the family, you just call me and we jump you in. So right. Come to your house and do a little gang membership thing.
Kenny Glick, New Jersey's finest trader. He'll be at the Benzinga Trading Summit June 20th. Kenny, as always, thanks for the time, and we'll talk to you later.
Always great talking to you guys. Good luck today. Good luck everybody in the chat room.
Thanks, Kenny.
All right, that was great. As always, he's fantastic. 849, Dennis, we didn't talk about imbalances yet. Are there any?
Yeah, you know what? They're showing look at this. GE. They got a buy-in balance, Spencer. 334,000 shares. First buy-in balance I've seen in a long time in General Electric. So anyways, 334,000 buy. GE is trading up in the pre-market. Is there a headline there?
Oh, gosh.
I don't think so, but maybe it's just a big imbalance. It's probably just a big imbalance. It's popping the stock up a little bit here in the pre-market. So it's up 1.1%. That's only an 11-cent move anyway. So $9.50. So GE with buy-in balance. Jump over here. Wells Fargo, 68,000 to sell. That's interesting. Keep an eye on that one because TLT is up today. So maybe if you get that one on the cheap, it could be okay if it opens too low. Man. Wells Fargo's 100,000, just changed 100,000 to sell now. Disney 44,000 to buy. That kind of stands out to a certain extent. Man, there's a few, but there's nothing really jumping out like crazy. I do notice a few sell imbalances though. So, that can be something because you're not seeing a lot of people come in. But again, it's the same story every morning. Institutions are holding their orders until about a minute before they open when they get them in there.
Let's look at GE. Haven't looked at that chart in a while, actually. And so
Fill the gap,
Buying
come in. If I was trying, and I'm not trying to buy GE, we know I've been bearish because of Inch. I mean, I'm not going to get bullish until those JP Morgan analysts and the Gordon Haskett analysts change their minds and start raising their price targets or going to at least neutrals on it. Yesterday's low 947. That'd be the line and stand for me. So if I was trying to play this and say, okay, I think it's going to bounce and get back up to $10, I wouldn't want to own it below 947. Below 947, I think it'd go to $9.
And I'm still in it from like 15.
That's okay. I'm in a lot of stocks from a lot higher too. I'm good at losing money in my long-term portfolio as well. Sometimes they work out, sometimes they don't. That's long-term investing. The difference.
That's why. All right, let's move on to a couple. There's a couple more earnings that were on my list. HP, HPQ and HPE both reported. I guess we'll do the HPQ. Yesterday, HPQ Q2 adjusted EPS 53 cents versus a 51 cent estimate. Sales of 14 billion versus 13.97. So essentially in line, slight beats on both those numbers. And their Q3 EPS guidance in line, the fiscal year EPS guidance in line.
I have a small position in this in the long-term portfolio, and it's very small. It's got the pop 1960. I don't know, $20. This looks so much resistance up there. I mean, we tried to get up there in the after hour session. It couldn't even quite get there. I think it got really close if it didn't kiss it. But you got all those tops just above 20. I mean, it's a wall of resistance. So can it get up there on this report? I don't know. This is one that could almost fade. So I'm talking against my buck here to a certain extent because I do have a little small long-term position in it, but I think there's major overhead supply up there 20.
Can he just can he just hop into the chat and put his link in there?
Okay.
I thought he may have given away the password. I don't know. Whatever. Okay, moving on. Let's look at
ratings. Can we just quickly fly through them? There's a few.
We can look at ratings. I haven't brought them up on my screen here in a minute. We've got, let's see here. As far as upgrades are concerned, Bloomin' Brands BLMN upgraded Guggenheim to buy this morning. Dow Inc. upgraded at JP Morgan to neutral. I'm not seeing too many. JP Morgan also upgraded KTOS to overweight.
Okay.
Not seeing too many that are super interesting. Vodafone upgraded by HSBC. 2 upgrades for Vail, RBC and Bank of America. Both upgrade. Well, Bank of America upgrade to buy.
Okay.
RBC upgrade to neutral for Vail. That's it for the upgrades that interest me. The downgrades today, what do we have? Big Lots downgraded Piper Jaffray to neutral. LII downgrade at UBS to sell. That's kind of it. Any more that you see that are interesting?
Not really. I mean, it's quiet, and this is something to know is that if you're an analyst and you see all this market volatility, you're holding on to those reports a little bit here to try to get a feel until you start to stabilize, because they can come out with a buy rating on something, and Trump can come out with a tweet, and we could down 400 points, and their buy rating is going to look out to lunch.
Unless you're Morgan Stanley and you want to talk about Tesla.
You got to be very careful when you're coming out with these analyst notes. So that's why you typically see a lot less analyst action when volatility is escalated. So once volatility starts to come down, you start to see more notes get released. So, and typically the biggest note day I'm going to say is always Tuesday. Monday, they're finalizing the notes and they're starting to get they're maybe had some stuff over the weekend. They're finishing it up and they're getting the reports out Tuesday, after their weekend. There's usually nothing on a Friday night because typically any analysts are already gone home to their families. So just knowing like there's a little analyst weekly cycle is Tuesday and Wednesday, I would say, are the biggest days.
I would definitely agree. I would say that Tuesday, Wednesday, Thursday are the biggest earnings days. Actually, maybe even Wednesday and Thursday. Wednesday and Thursday are the biggest earnings days.
For sure.
Tuesday and Wednesday are the biggest ratings days of the
I think so too.
Yeah. Question from the chat here. We'll drop in some takers. Let's talk about Roku here. Someone brought that up here. We haven't talked about this one for
unbelievable moves, man. This stock is the honey badger of honey badgers. This stock just goes straight up no matter what. Think about the market. Market's been straight down here for basically the last month. This stock is still going up. So it's gap, it had the gap and go from earnings. And obviously, I thought about, short, I didn't short it, but I talked about it on the show. I was like, when I had that earnings report and it was trading 70 in the pre-market, I was like, let's see what it does at 73, 74. Maybe it fails there. It did not. It blew right through it. So, you obviously got to say, okay, if you're short at that point in time, it starts making new highs. I don't want to be short it. I never want to be short a stock making new all-time highs. I might try it at a previous high. If it takes it out, I will quickly cover. So anyways, Roku has continued to go. Unbelievable resilience. The buy back in December at $25, at $26, unbelievable as well. I don't know what stops it. It's going to take an analyst or it's going to take something, but the relative strength in this thing, it's got to be one of the strongest stocks that are out there right now. So fighting that is very difficult to do. Maybe eventually get a red candle, and then then you can maybe try to think about that a top is in. But until you get a red candle or something, I mean, this stock is just, it's making new highs again here today. It's been an unbelievable mover.
Last time I checked, and I'm checking again right now, yes, it is the best performing large cap of the year. I
don't doubt it. The stock has been unbelievable.
Yep. Here's a good question from Ecograph, Dennis. So we talked about discretionary orders and how you use them about a half hour ago. What he does instead is he sets an alert that triggers a buyer sell at the mid price. If it's hit, or an adaptive algo limit order, so it's not seen by the market and gets a better price.
You're doing it, but the thing is, when you go to mid, you may not get it. I mean, mid's looking for something at mid. It's looking for a counterparty at mid, and I use midpoint orders too. Especially, they're very good off the open. And I use something called PDQ. Shout out to PDQ guys out there. They find some liquidity, so it'll look for counterparty at the mid. Their midpoint order works pretty well. So if the stock's really widespread, like 50 cents, I throw a PDQ mid. Let's see if something's out there, because maybe I don't want to lift an offer, but and it's really wide, but maybe there's another person on the other side that wants to get the hell out. So if I'm trying to get in, maybe they want to get out. Maybe we can be a happy midpoint trader. Or find find some liquidity at the midpoint using whatever software you have. So lots of midpoint, there's lots of different, every broker's got their own types of midpoints and that they can use. But it's a good tool. It's a good tool to use, midpoint. It's just, if I'm looking to get in a trade, for sure, that's why I use the discretionary order, because I'm lower, and if something gets offered there, I'll take it. It'll automatically lift it. Midpoint is looking for something, and there's not always something at the mid. So you might be going there, might say, hey, I'll execute at the mid on the buy side. If there's not a counterparty there, there's nothing there. There's nothing there. There's nothing there. So I immediately cancel my midpoint order then, because if there's nothing there, there's no sense possibly, getting some information leakage here where somebody might realize, hey, there's a midpoint buyer here, and now they're going to take it up. I never want them to know what I want to do. So you just got to be careful with those midpoint orders. You continue to use them all the time, I think there can be some information leakage on those. If you have your own algo written, that's different, where you've got an own algo trying to find something, and then it's going to automatically try. But as soon as you send an order into the physical market, there's definitely some people that can, especially if it executes a little piece, and high frequency traders, the order sniffers can quickly sniff that out, that, hey, somebody wants to buy here. Okay, I've got something to lean on. Now I'm going to, lean on this person that's sitting at mid and try to take the stock higher on them. So be careful, but midpoint orders are useful as well.
Do you use the adaptive algo feature on IB?
No, I don't trade much on IB.
Okay,
so
yeah.
I have IB, like I do some stuff on IB. I have it. It's a different inventory too. So I like to have more than main use of IB for me is that they might have a different inventory than Goldman does. I mean, I clear Goldman, I have the Goldman inventory. And then IB, I have another inventory. And IB is more aggressive in their lending practices. If they got somebody that owns like a couple thousand shares, they'll lend it out. So, I mean, I often can find a borrow in IB, on some of the thinner stuff that I might not be able to find in my other platform. So, and then, it's got some other tools and stuff. I mean, I try to, use it from a swing trading perspective. I try to put them on in my IB. So if it's in my regular day trading account, I'll get out. So there is different reasons I use IB, but it's another tool too. And if, you have a platform issue, let's just say hypothetically, you have, some software that goes down, it does happen. I have a backup. So I always want to be able to still trade. So I have it on, I can get it on a different connection quickly too. So there's multiple reasons for having IB, but I don't know that much about Interactive Brokers. So I don't trade on it that much.
Okay. 8:59 here. Any final thoughts as we head into a long 3-day weekend?
Well, yeah.
Oh, yeah.
I don't know about the 3-day weekends.
Yeah.
It's you look at the market. We've been in a yo-yo market. Are we going to get headlines over the weekend? Probably, because we seem to get headlines all the time, at least from the Twitter feed of Trump. So what's going to happen here? Are they going to come in? Are they going to, are the shorts going to be nervous and want to not hold short over the weekend? Or the long's going to be nervous and not want to hold long over the weekend? All to be determined. But I would say in the last 20 minutes, going to a long weekend, you'll have some jockeying. You'll probably have some movement. You'll probably have a pretty volatile close. So that's what I'll look for, some volatility at the close.
All right. I think we got to a good number of your questions in the chat. I apologize if we didn't get to all of them, but that'll be it for today's show. If you missed any part of it, you can catch a podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts, or just rewatch the show on youtube.com/Benzinga TV. Thanks to our guest, Kenny Glick. Want to remind you all about the Benzinga Trading Summit, June 20th at the Sheraton Times Square in New York City. If you go to bzprofit.com, you can learn more. Enter the promo code PMP15. That's all caps, PMP, as in pre-market prep 15 to get 15% off any ticket, including to the exclusive trading lounge where Kenny Glick will be. Dennis and Joel will be there as well. That's all I got. So please remember that all the information from our show is for informational purposes only, not meant to be investing advice. As I mentioned, we're off on Monday, so we'll be back with you folks on Tuesday. Have a good Memorial Day weekend.